What is the best electric vehicle company in the world? Is it Tesla or is it BYD? In today's video, we're going to look through their financials and find out which one stands at the top. Let's get into the video. We are going to use MSN Money today to compare the financials of Tesla and BYD. We can see that Tesla's current share price is $398.68. Its current market cap is sitting at $1.5 trillion. If we look at BYD, we can see its current share price is $96.45. And its current market cap, this is in Hong Kong dollars, it's actually roughly $117 billion. Going to Tesla, we can see its daily trading range was between $381 and $401. And in the last 52 weeks, Tesla has traded at its lowest point at $214 and at its highest point, $498. So it's currently trading at $100 less than its highest price. We can see that the average trading volume for Tesla is sitting at 60 million shares traded per day. We can see that the current shares outstanding is sitting at 3.75 billion shares. It currently has an earnings per share ratio of 1.08. So every single share that you buy, you are making $1.08 back. We can see that its price to earnings ratio is sitting at 370, which is extremely high. And Tesla, therefore, is not paying any dividend yields, and therefore there's been no ex-dividend date. Looking at BYD today, we can see that it traded from $95.65 to $98.90. We can see that over the last 52 weeks, its lowest share price was $88.50 and its highest share price was $159. We can see that looking over the last 52 weeks, BYD is actually trading near its lowest point over the last 52 weeks. Looking at its average trading volume, we can see that BYD usually trades roughly 32 million shares a day. We can see that BYD's earnings per share ratio is 4.85 with a price to earnings ratio of 36.25. This is absolutely massively cheaper compared to Tesla. When you look at its earnings per share is $1.08 per share with a price to earnings ratio of 370 compared to BYD's earnings per share ratio of $4.85 with a price to earnings ratio of 36. It's almost 10 times cheaper. If we're only looking at the earnings per share ratio, we can see that BYD is actually almost 10 times cheaper than Tesla. We're going to have a brief look through Tesla and BYD's financial statements. We can have a look at Tesla's revenue growth. We can see that in 2018, it made $21 billion, 2019, $24 billion. And in every single year, we can see that Tesla has made an increase on their growth, except for last year, 2025, its growth shrunk by 2.93% at $94 billion. However, going from 2018 to 2025, we can see its growth has increased significantly. We can see that from 2018 to 2025, its cost of goods sold has increased every single year. As you'd expect for a company that's growing their revenue, their cost of goods will also increase. We're going to have a look at Tesla's net income, and we can see in 2018, 2019, it lost money. Then the following years, Tesla did start making money, but we can see, unfortunately, there's no consistency here because in 2023, Tesla made $15 billion in net income, but in 2024, its net income dropped by 52% to $7 billion, and then in 2025, it dropped nearly another 50% to $3.79 billion. Now, unfortunately, when we look at BYD's financials, it is all in Hong Kong dollars. However, what we're going to look at is the growth that BYD has had every year. And we can see that with the revenue from 2017 to 2024, its revenue growth has been substantial and it's grown every single year except for 2019, it stayed the same. But aside from that, it's quite consistent. And in 2022, its revenue growth was insane at 96% additional growth. Following up to 2024, it grew 29%. When we look at its cost of goods sold, we can see that its cost of goods has increased every year except for 2019 as well. And its cost of goods has not grown as much as the revenue, which is a good sign as well. Looking at BYD's net income, we can see it's quite inconsistent until the last 3 years, where it has gained a significant amount in income, especially in 2022, where it gained 445% on its net income, and then it grew another 80% and then another 34%. Looking at Tesla's balance sheets, we can see that its current assets has grown every single year at a significant amount. We can see in turn, though, that the current liabilities has grown every single year. However, Tesla is able to pay off their current liabilities by more than 2 times the amount, which is a positive sign. And Tesla's long-term debt is actually at quite a minuscule amount compared to its net income and its current assets. We can see also that the shareholders' equity has grown every single year as well. Looking at BYD, we can see that their current assets has grown every single year, as well as their current liabilities. Unfortunately, BYD's current assets cannot cover their current liabilities, which is a bad sign. Looking at BYD's long-term debt, we can see it's currently at 17 billion Hong Kong dollars. Fortunately, it made 40 billion Hong Kong dollars in net income, so it's more than able to cover its long-term debt. We can have a look at the shareholders' equity. We can see it is growing steadily every single year, especially from 2024 to 2023, it grew a significant amount. Last thing we're going to look at today is Tesla and BYD's price graphs. We can see in the last year, Tesla has increased in price by quite a significant amount from the bottom of roughly $225 to closing today at $398, compared to BYD 1 year ago sitting at roughly $213 and now fall into a price of $96. Now, it's my belief that BYD is a better investment compared to Tesla, not only because most of their electric vehicles are cheaper than Tesla, but its revenue growth is higher than Tesla. And when BYD continues to grow and expand globally, I believe that growth will drive up the price for BYD and the value as well. I do also believe that BYD's price to earnings ratio of 36 compared to Tesla's price to earnings ratio of 370 is an incredible factor that you need to take in comparing both the stock price and the value for money that you're getting with your investment. With all that said, that's it for the video today. I'd love to know your thoughts on which company you think is a better investment and why, and I'll see you guys in the next video.